The Edgeless Horseman here. It's April 11, 2022. In this video, I'll just briefly discuss how I look at corrections and, the fears of crashes, etc. I mean, in my opinion, uh, as I've stated before, my process is very simple. I buy something which I think is undervalued and will be worth even more in the future, and I sell something that I don't think is as undervalued. And a lot of people, which we've seen especially around the latest bottom in miners, etc., a few months ago, I mean, people worry about a crash after there's been a crash. That to me doesn't make much sense, because it's like you should be fearful when prices are high and you've had a I don't know, 2 year uptrend or something like that. I mean, every passing day that something goes up is another day closer to a serious downtrend. Any passing day in a downtrend is one day closer to a serious uptrend. And like the saying goes, I think it's Peter Lynch who said that more money has been lost trying to anticipate and prevent losses than actually what happened during the actual crash. So it's like this is the flash crash of 2020. This is my small, let's say, more active trading portfolio. Well, I wouldn't say active, but it's more active than the rest of my portfolio, because I most stocks I haven't touched in a year, let's say. It went down 53%, and most people would, think, well, okay, if you can see a 53% loss, you can't be making money. Like it would be some rule or whatever. And it's like, okay, when should you sell in that case? I mean, when is the crash happening? I mean, if you're wrong on the timing to the upside, I mean, this is the 2016 rally. And here it topped and then went down for 2 years. So when are you supposed to sell? When do you call a top here? Is it here, 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 here? Is this the start of the crash? Is this the start of the crash? I don't know, but obviously if you just buy low and are correct, let's say in the longer term or in the broader sense that you're buying something cheap, you can have a 50% correction like this. I mean, this is the 3 year chart of the same portfolio. So like this was a 50% correction. I don't know what this was, maybe 30% or whatever. Does it look like I'm hurting here just because I don't predict every major downtrend? I mean, before this 2016 rally, my portfolio was down, I don't know, 50% in 4 months. I mean, imagine if you get into the markets like I did, or get into the mining sector, not knowing too much about the actual mining sector. I mean, I was a complete rookie back then. Didn't know much about the sector. Hadn't really had any money to manage, let's say. And I was down 50% in 4 months. Most people would like, okay, close up shop. Investing is not for me. Obviously, this is a disastrous result. But I just kept on buying, because I thought, okay, these miners are just getting cheaper and cheaper and cheaper. And because I bought and didn't sell and believed that what I was buying was too cheap, it's gonna go up someday. I don't know when it will go up, but it's gonna go up one day, because these are decade levels in terms of cheapness. And sure enough, I got rewarded for my having staying power and having common sense. So that's like I told this guy, I've been 100% long since 2015. I've seen, I think, around 40 to 60% corrections in the entire portfolio. So I don't worry what to label it. Is it a bubble? Is it a, is it a crash or whatever? I mean, I do think we will get into a bubble, and I do think we'll have a big crash after that. But at the same time, it's like if you're up, who knows? I mean, let's say you stick it out and you're up X 1000% in 4 years. You can survive a pretty big downturn in that case. So it's like, again, it's not getting the short term right. It's having a process that will make you money over the long term. I simply have a process of buying what I think is undervalued and selling when it's less overvalued. In terms of like absolute tops, I have no idea how to pick an absolute top. I have no idea, like, selling the exact top. I have no idea. I just keep buying something that's cheap, keep selling something that's not as cheap, and in time it has proven to work. So again, it's like which we've seen recently. I mean, most people, they worry about uh, they worry about a crash here. This is when they don't want to buy. They don't want to buy this. They don't want to buy this. It's like you should be worried about the upside, let's say. Here or here, you should be more worried about downside. And in GDXJ, for example, I don't know what how cheap GDXJ is right now. But I don't buy GDXJ. I pick companies that I think are cheap. So it's like, let's say this was I don't know, another stock, and I thought it's worth around this much. Why would I worry too much about a crash? Unless I'm levered, etc. It could go like this and back up here. It can go like this. It can get into a bubble, etc. And go all the way up here. Hopefully, I'll be selling this and buying something that's as cheap as this was back here. So I mean, when you have common sense dictates that, again, people are worried about price going down. That there's no way to make money if you're a part of a crash. That's not how it is. If you make enough money during the upturns, etc., you can afford crashes, because there's still, I mean, this for example, yes, this was a major crash and some juniors went down 50%. Was that a big problem? Let's say your junior was worth this much, approximately. It was trading at this and went down here. Where is the actual problem here, except that it sucks looking at the portfolio? Because price went down here, does that, is your portfolio over? Is your investing career over because price went down here? No. Okay, if you fast forward, they had no business going down this much. So what do you think is going to happen in the future? And like now, for example, juniors have been incredibly undervalued for the last 2 years. At least, some more than others, etc. But it's like after the 2 year downtrend in price and some, many juniors actually going up in value, what's the problem really? Except it sucks to be looking at the portfolio. It just means that the eventual upturn is going to be even larger. This price to value gap has just been expanded, so the opportunity has gone exponential. That's not a problem in my opinion. But when you only look at price, you get fearful of price, if you know what I mean. So it's like break the cycle in terms of, like, okay, realize that this is, let's say it's sentiment index here. Typically, again, people buy here because it's easy to buy, because it's been going up and you start to project. And the worst thing they do typically is if they buy here and they are a part of a 2-year downtrend, they think my strategy is not working. Uh, I'm too. This sector is too bad. Whatever. You can't. I've seen people say you can't make money in juniors, etc. No, you can't make money in juniors because you have the totally wrong strategy. You buy here and then you sell, making an even bigger mistake, and then you walk away saying that you can't make money in juniors. You need to break this cycle. I mean, if you started out buying here in any sector, sure, that it kind of sucks. Obviously, and you see a 2-year downtrend. How do you rectify your buying high? That's rectified by buying low. So if you just kept on doing buying here, selling here, buying here, selling here, of course you're gonna lose money. So the first step is obviously to realize that you've been going, about this investing thing the whole wrong way. So even if take me for example, again, I started out with a 50% downturn. I bought around, Bear Creek Mining is pretty much I actually own Bear Creek Mining. So let's say I was buying down here and saw a 50% downturn. I didn't go into this whole buying high, selling low cycle. No, I immediately bought more. So I broke that immediately, and then I've been long through this entire thing, but stock picking and increasingly buying, like lately last 2 years, and increasingly so last few months. I've been, let's say, trying to generate as much dry powder as I can and get into private placements, etc. So I showed that I can break the cycle and beat the market already 4 months into my mining investing career, because I was already then able to buy low. But most people, this a 50% downtrend crushes them, and they immediately do the wrong thing. So it's like you have to be self-reflect in a sense that what you're doing right now in this sentiment bottom, that's going to dictate your future returns. That says a lot about how good you are at being a value investor and a long-term investor. So what you're doing right now, like what I did back here, has immense ramifications of the future. If I sold here and bought here, I think my portfolio returns would be 1/3 of what it actually is. So obviously, what I'm trying to say is, obviously you can suffer huge downturns in your portfolio as long as your strategy is sound. So it's like a fear of prices going down. How first of all, how on earth are you gonna get outsized returns if you don't buy low? So with a crash also obviously comes opportunity. But if you, this is obviously a worse opportunity than this. And if you buy here when opportunity is worse, and then you think you should sell down here, then you don't even know what an opportunity is, and then you're completely lost. So it's like you have to break the cycle. It's okay not to be the best investor when you start out. But one of these days, in order to beat the market in the long term, you have to break this cycle of buying high, selling low. I broke it immediately. I thought I was selling low here. Obviously it went lower. But I saw that as, okay, this is a greater opportunity. This wasn't a mistake buying here, even though it's down 50%. Because, if you bought Bear Creek Mining here, you're up like, I don't know, 200% in 2 years. So it wasn't a mistake. But a mistake would be to make an even worse mistake, which is selling low. And again, typically people worry about a crash after the crash has already happened. People don't want to buy here. When I wrote last few months, I'm buying. I get flack for like, how can you be bullish? In my opinion, how can you not be bullish? This is the most absurd, obvious opportunity in the junior space that I've ever seen, at least. Way better than 2015-16. So like, What you do now and think now during these sentiment lows, that tells you everything about yourself, how you view investing, how much common sense you have, how much you look at price versus the price to value gap. This is a layup, beyond a layup. So when I see that I'm, one of few out there who actually nosebleed bullish, I just know, wait, wow, I'm gonna keep beating the market by a mile as long as I live, perhaps. Because if I've already, let's say, mastered the sense of price is what you pay, value is what you get. So like you have to take responsibility to break this cycle, and it's okay that you don't need to be the best investor when you start off. It's just that you have to realize that the only way, if you're down 50%, let's say, if you bought here, this is the beginning of your investing career. You bought here, it went down here. And you think, well, okay, everything is lost. My portfolio is down 50%. So you think you automatically did a mistake, and you think you have to do something else. And since you bought this thing that's down 50%, you think the way to go about it is selling it, because you think that it was a bad decision, or this sector, etc., is the reason for it. And because everything we do, obviously we think it makes sense. So the people who are saying that, well, the mining sector is not worth the time here, they believe that's the case, because that's their experience. But in order to have a different future experience, you obviously have to start doing things that makes more sense. So selling here is a bigger mistake than buying here, and two wrongs don't make a right. So even if you bought here and saw a 2-year downtrend of I don't know, 60%, you can still beat the market in the future. You just have to rectify your investing. You have to do something different. So when you start buying, seriously, if you're down 60%, if you bought here, if you bought here, held it down here, and then you just flip a switch, realize, wow, okay, value investing, price to value gap, sentiment, I realized I should be buying here. Then you'll start buying here, and maybe you take some money off the table here, or you're more selective in what you actually own, because a lot of stuff will be overvalued. Then you go down again, then you buy more. You'll have this kind of movement, and your initial, let's say, welcome to the markets moments will turn into, again, 53% down, and still a 3-year short 1500%. So it's like, what I'm saying, I think makes sense, and I'm saying it because I know it works. If I didn't beat the market, I wouldn't be out here, trying to give advice to people, because I would have no right to really say anything. But there's a bunch of people out there that does not beat the market, have poor returns, except anyone can have 1,000% returns in a year, whatever. You could be in Dogecoin, you can be in Bitcoin, you can be in Shiba or whatever. You can be in a penny stock. That doesn't make you a good investor. You only know if you're a good investor in the long term. The more decisions you have to make, etc. When you see the average of all your decisions, which I don't know, maybe 5-10 years at least, to see that you can consistently beat the market, because anyone can get lucky on a stock and unlucky on a stock. So it's like, again, just because you are down or whatever, if you bought high, doesn't mean you should sell low. You have to break this cycle. You could start your investing career here, and if the only thing you actually did was just buy a bit more as it got cheaper, this here you're buying a lot more shares than you owned up here. So even if you invested with 10,000 here or whatever, and you bought, let's say 3,000 in this period and 2,000 here, when this goes up here, etc., you're gonna have made quite a bit of money. Well, okay, GDXJ might not be the best example, uh, since again I don't know really how cheap this was at any point here. But just buying low, and then maybe if you hold it through and you're a, let's say, long-term investor, maybe it goes up here and then down here, and you repeat the process. So you buy, let's say, less up here, but when it starts going down again, you ramp up your, let's say, dry powder generation, or you sell something that's, a bit more overvalued. So it's like my process is extremely simple. I buy something I think should go up and stay up. And if that goes down 50% first, that doesn't mean it's going to stay at 50% minus. It could very well crash by 50%, then go up 500%. So it's like, I know I don't know, it's not the sexiest approach, obviously, because everyone wants to predict price, etc. I'm predicting some kind of price level sometime. I'm not predicting what price is gonna do tomorrow or whatever. It's like the flash crash. The price had no business staying down here. That's volatility. That's not risk. But people think that risk is a price going down. No, the risk is buying something that should go down and stay down. That's risk. If you if let's say this red line here, well, this lower line on this red zone, let's say that's the intrinsic value of a stock, and you buy it up here, your risk is that you're overpaying for it, so it should go from here, let's say, down here and stay there. But if you bought something that's, you think the value is around here and you bought it here, yes, it can still go down, but it's gonna come back. It's gonna come back. It's gonna come back. So that's not risk, but that's depending on what you do with it, because you obviously solidify a loss. Let's say, I mean, if you bought this and you know it's, probably worth around here, and you bought it at fair value, even it went down here. If you just wait, you'll make your money back, and then some. But if volatility takes it down and it becomes increasingly cheap, so the opportunity is a lot better than when you bought, and that it was an okay purchase in the first place, and you sell here and walk away and don't buy anything else that's even cheaper, because it's okay to sell something if you find something cheaper. But if you can't find a opportunity that's better than the one you sold here, you just cemented basically volatility to risk, let's say, because it was gonna come back, but you won't be a part of it because you sold out. So like I say, I hate selling low. I hate selling 52-week lows. I have to have a very good reason to sell something at 52-week lows. And typically 52-week lows coincide with an incredibly cheap company. So I refuse to sell. And one day we're gonna look back at the valuations we see out there, and we're gonna say, wow, I cannot believe I was able to buy Junior X at price Y when gold was, at 1958. I mean, there's incredible bargains out there, and if you can't see that, I don't know how you're gonna beat the market. If you can't, again, if there's the most blatant opportunities that at least I have ever seen just staring you in the face, and you can muster up the strength to buy that, you will never ever ever beat the market, because you will not break this cycle. You will keep buying when it feels good, not when it is good. So what you do and think right now at times like this says everything about what I mean, I can look at people's comments on Twitter. If someone says, wow, I'm buying right now, where I'm buying also, whatever. Oh, it's so damn cheap. I mean, I know they will beat the market because they have the right mentality. But the ones that are fearful about what if a crash happens, etc. They don't really know what they're doing. They don't really understand the difference between price and value. And if you're always fearing about the next crash, etc. I mean, just look at a great example, just the overall market. I mean, I thought the overall market has been, expensive for quite some time, or at least I've been waiting for this fiat scheme to implode since, I don't know, 2014, 15. Yeah. If you worried about a crash all this time, you missed a lot of upside. And obviously, it's like now, for example, you can have a 60% or 50% crash, and you still actually, at least be plus from here. Now, that is not an attractive opportunity to me, because it's like, I mean, why would I buy a stock market at PE 30 when I can buy miners at PE 4 or 5 equivalent in the junior space? But you get what I'm saying. It's like, and especially if you bought the lows, etc. I mean, you'd obviously crush it even more. So again, you don't need to be a perfect investor, but you need to start thinking about how the market works, and that price does not equal value. And selling low doesn't make you buying high any better. You can afford to buy highs just as long as you increasingly buy lows. That's all. That pretty much all I do is just buying something that I think is cheap over and over and over again, and I will have corrections where the things that I thought are 50% undervalued will go down 50%. But that's okay, because when they come back, I make that back and more. And especially if I'm able to buy when it's down 50%, those purchases at the lows, I mean, they're going to supercharge your portfolio. So maybe the entire portfolio, if I just bought here, maybe I was up 200% or whatever. But the bias at lows gave me 500%. But everybody wants this return. They want to buy the exact low. So it's like, again, they think it's a mistake buying here because it went down further. No, I don't do timing like that. I have no idea when the bottom is going to be in. Because if you look in hindsight, buying here, let's say it gave me a 200% return in this period, that's a great return. But if you can't even buy the 200% returns because you're so greedy that, no, I wanna catch the absolute bottom, I wanna have a 500% return. Okay, what if you don't get a 53% crash and it goes up instead? So that 200% return instead went down to 100% return. So I beat you by 100% just from not being as greedy as you are. So it's like, we're not after perfection. We're after common sense and risk reward. That's again all you need to do. Final thing, again, you have to start breaking this cycle of buying high, selling low. And it doesn't matter if you are down 50% because you bought this. You can still have a great investing future just as long as you rectify that behavior starting now. So don't walk away in disgust. I mean, put your nose to the grindstone and figure stuff out. Because if you're going to have a long investing career ahead of you, you're going to be making a lot of decisions in the future, and you're going to be a part of a lot of ups and downs. So start doing the things that make sense, and stop doing one decision that appears to be let's say bad decision, and then you just make another bad decision, and then you walk away. It's like, okay, you gave up. You didn't want to fix anything. You had no willpower or no interest in actually doing any hard work. So you're going to be like 95% who doesn't beat an index because they never take the time, don't have the discipline or willpower or whatever. So it's like, the best day to start thinking about investing and doing good decisions is today, regardless of what you did yesterday or last year. Yeah, this was a um, quite a rant here, but I really want to hammer in these things because I don't think I will be. Who knows? I mean, I don't know how long I will actually, be investing or at least, writing on Twitter and stuff like that. So I won't be here hammering, pounding the table at, increasingly so the cheaper something gets, and let's say hold people's hands. I think this market is in some way boring because it's like once you figure out this stuff, it's so easy. Then it's just waiting. It's just buying and waiting, etc. So I expected more from the market, but that's how it is. It's like again, I think my background in poker has been very helpful because you couldn't afford making emotional decisions. You constantly had to do what made sense from a mathematical and risk reward perspective, repeatedly. Every hand, every street, you had to make the most, let's say, the decision that made most sense. What am I paying for it? What's the probability of a win? How much do I gain if I win, etc. So obviously, okay, how does this relate to this? Okay, let's say Bear Creek Mining is dirt cheap down here. I don't own Bear Creek Mining, but just for an example, let's say it's dirt cheap here, but you can't muster yourself to buy. I mean, what are you afraid of? That what is dirt cheap becomes extremely dirt cheap. But what happens if it goes up? So it's like the downside is, limited in scope and in time, especially for you, let's say you have a diversified unit portfolio. But the upside is massive, obviously. If we're not even close to greed levels here, I mean that's like a let's say 300% upside, which will happen someday because we know sentiment always turns, versus like 30% downside risk. And it already should be up 100%. I mean, the risk reward is blatant, like it's blatant now, but people can't see it. They think, okay, how's the weather gonna be tomorrow? Same as yesterday or today. Things always change. We're after the delta. We're after for buying when the pendulum is at one extreme and waiting until it hits the next. That's all we need to do. And if you're in good companies, you won't have a trading sardine like this. You will more have a zigzag movement like this. Yeah, thanks for listening. I'm gonna be pounding the table for some time yet, perhaps. Bye.